Hello guys, welcome to House of Accounts. Okay, so we are in this video we are going to see the hire purchase and installment purchase system. Okay, so we have already discussed about the hire purchase installment purchase little bit theory. So calculate the interest separately. Interest is including installment. Remember this note. Calculate interest separately. Interest including in this installment. So let's see the question number 8. On 1st April 2004, Motor Transport Company ordered a motor vehicle whose cost price is 25,000 and entered into a hire purchase agreement to pay 8 installment of 3,300 each. The first payment to be paid on 30 June 2004. Okay, 30 June 2004 means April is starting April 2004 and ending 30 June. The rate of interest is 5% per annum and the vehicle are to be depreciated 10% per annum. Okay, as per diminishing balance. Show the motor vehicle account in the books of purchaser for 2 years ended 31st March 2006 only, started from 2004 ending on 2006. So 8 quarterly installment means every year. 1 year contains 4 quarters, 2 years means 8 quarters. So every 3 months we have to pay the interest. Okay, so in working notes we have to calculate for quarterly, but in ledger account we can make it for yearly. Okay, it will easy for us to make it for yearly, or we can also go with the quarterly or half yearly, but no problem, but it makes some much large ledger. So let's see the working note, some information note. Okay, depreciation method followed by, here is a depreciation method is a diminishing balance method. Okay, so no need to, this is for from last previous question, so I'm deleting this one. Okay, now see note. 1 year contain 4 quarters. Okay, note. Okay, 1 year contain 4 quarters. Okay, 1 year contain 4 quarters. Every quarter we have to pay interest. Every quarter means 3 months. Okay, interest to be paid. 1 year contain 4 quarter, interest to be calculated for every quarter. Okay, for example, xxx, we can take the xxx into, if it is 5%, then 5 divided by 100, or directly 5%. Okay, if into 1 by 4, because it is divided in quarters, so into 1 by 4 whatever the amount, or else you can. Okay, 1 year contain 4 quarters, interest we calculated. Okay, interest of excess you can take some amount also, no problem. Here what is the cash price? 25,000. Okay, so 25,000 we are not we didn't paid any down payment here. See, there is no down payment, so directly 25,000 we have to pay the interest. We have to start in calculating interest from 25,000 only, because we don't have any down payments. So 25,000 into 5% into 1 divided by 4. Let's go for working note first. Here working notes, cash price is 25,000. Okay, we don't have any down payment, so down payment is nil. Okay, see in question there is no down payment, just 25,000 cash price and 3,300 installments. Okay, there's no information about the down payment, so it is nil. Now the balance is 25,000 still. Now we have to calculate the interest. Okay, so this is the previous okay, first mm, interest is not included in installment. Does it include in installment? No, it's not included in installment. So directly, okay. So 25,000 into 5% into 1 divided by 4. Okay, this is how we can calculate interest. 3,000 or 313 only. Otherwise, we can take okay. Let's make it some viewable. Oh, the worst thing happened. Okay. Alright. So 25,000 into 5% into 1 divided by 4. Okay. So this is the first quarter. We are taking for first quarter. Okay, let it be. I'm making it black. Okay, so we don't have any down payment, 25,000. The remaining amount is 20,000 balance. From that we have to add first quarter interest. Okay, okay, we have to add the first quarter interest here. Alright, so here is the first quarter interest. How much? 313. Okay, so add this 313 and here delete this 12,000 into 6%, delete this one. Now first I'm adding this 25,000 313. Okay, now let's delete this interest first year 12,000. This is previous year question, so let's delete this one. Okay, wait, first installment, we have 3,300 for first installment, but that installment is a okay, that is the first installment. Now we have to modify this. Now 12,000 into 6%, I will remove this one. Okay, just wait. And here 30 June. Okay, from 1st April to 30 June. Okay, first installment 3,300, 25,313 minus 3,300, we will get 22,013 only. Okay, and this, remove this 12,000, remove this one. 25,000 into 5% into 1 divided by 4. Okay, into 1 divided by 4. Okay, now add second interest, 22,013. Okay, so first year interest, or okay, first interest or first year, we can say first year interest, first quarter. Now the second interest is 22,013 into 5% into 1 divided by 4. Let's see on calculator. 22,013 into 5% into 1 divided by 4. Let's see, let's do it again. 1100 into 1 divided by 4. Okay, into 1 divided by 4. 275 second quarter interest. Add these 275 to 22,013. Okay, so let's see some working note here for interest. $22,013 into 5% into 1 divided by 4. 275 we will get interest. Okay, now add this interest 275 to 22,013, so we will get 22,288. Okay, now pay the second installment. Let's pay the second installment. It's 30 October. Second installment is 3,300. So let's change the date. 30, that is June. So next 3 months is 30 October 2004. Okay, 30 October 2004. October, September, August, September, 30 September 2004. Okay, now let's make it some zoom. Okay, see here, 30 September 2004. This is the second installment. So deduct the second installment from 22,280. We'll get 18,988. Now add third quarter interest. Okay, so we have a 18,988 into 5% into 1 divided by 4. Okay, let's see how much we are getting. 18,988 into 5% in a working note. Let's see, 5% into 1 divided by 4. So let's see on calculator. See here, 18,988 into 5%, 949. We are getting 949. Okay, remember, 949 into 1 divided by 4. So 237. We are getting 237 interest for third quarter. Right here, 237. Add 237 with 18,988. So we will get 19,225. Now pay third installment. 3,300. Deduct these 3,300 from 19,225. So the balance is 15,925. So fourth year interest, 15,925 into here. Write the date for third installment. That is September, means after 3 months it will be December, 31st December 2004. Okay, so this is for third quarter. Okay, this is for third quarter. Now for the next quarter, 31st March, fourth quarter. So right now calculate the interest. 15,925 15,925 into 5% into 1 divided by 4. So here see in working note, 15,925 into 5% into 1 divided by 4. So how much we are getting? 199. We are getting 199. Let's see on calculator. 15,925 into 5%, 796 into 1 divided by 4. 796 into 1 divided by 4. See 199. We are getting 199. So right here interest is 199. Add this 199 to 15,925 for balance. So 16,124 we will get. Okay, now deduct the fourth installment, that is for 31st March 2005. 31st March 2005, 3,300. Deduct these 3,300 from 16,124. So we will get 12,824. Now the fifth year interest. 12,824 into 5% into 1 divided by 4. Okay, and see in working note, 12,824 into 5% into 1 divided by 4. Okay, 160 we will get. Okay, how much we are getting? 160. Add these 160 to 12,824. 12,984 we will get the remaining balance. Now pay the fifth installment. Fifth installment is to 30 June 2005. Okay, so fifth installment till 30 June 2005, 3,300. So the balance is after deducting 3,300 from 12,984. Okay, all right. Let's calculate this one first. Let's make the line for balance. Okay, okay, deduct 3,300 from 12,984. So the balance we will get okay, no it won't come. Okay, it's not coming. So here, right here, balance So balance. So after deducting 3,300 from 12,984, we are getting 9,684. Now add the interest. Sixth. Okay, add it. Now plus interest, sixth quarter. Okay, that is 9,684. Okay, into 5% divided by 1 into 1 divided by 4. Okay, take 9,684 into 5% into 1 divided by 4. So how much we are getting? 121. Okay, now add or deduct sixth installment. 3,300 will be the sixth installment. First write the total, add this one, 9,684 in plus 121, we will get 9,805. Now deduct sixth installment. Okay, that will be 3,300, the same. Okay, so and that will be 30 June. After June 3 months means July, August, September, so 30 September 2005. Okay, here we have paid second year first quarter installment. We are paying 3,300 deduct from 9,805, so we will get 6,505. Okay, now this is balance. The remaining balance is 6,505. Okay, add the seventh quarter interest balance. Here first write the symbol of add. Okay, I'm drawing here a line for interest total. Okay, so now first write the symbol add. Okay, add interest seventh 605 into 5% into 1 divided by 4. So how much we are getting? Let's see, 8. So we are getting 81. So add this 81 to 6,505. So we will get 6,586. Now okay, deduct installment, seventh installment. First write the symbol of deduction, and here seventh installment. Okay, seventh installment, that is September. So now 31st December 2005, that will be 3,300. Okay, so the remaining balance is 3,286. 3,286. Okay, so now what we have to do is we have to add for last and final seventh installment. or 8 quarter. 8th installment. Okay, so 8th first, after balance add interest, 8th quarter interest. Okay, take the add symbol, interest 8, here no need to multiply with 5% or something, here directly 3300 installment minus 3286. Okay, remaining balance. So see what is, how much interest it is, 14. We just have 14 rupees for interest, so the overall 3300. Now pay the last installment, 8th installment. Okay, installment 8th and full and final installment 8. Okay, this is 31st December, 31st March 2006. Okay, 3300. The overall answer is 0. This is how we have to prepare the working note. Now the ledger are very easy, so let's don't make it for too long to calculate every quarter. Let's make it year by in ledgers. Here this is the way how we have to calculate. Okay, this is for second year, this for third year, this for fifth, sixth installment, seventh installment, 8th installment. Okay, now let's see the ledgers. So 1 year contained 4 quarters. So let's see, the cash price is 25,000. Okay, we have to calculate machine account to vendor. How much? 25,000. 1st January 2004. Here look, 10% depreciation on diminishing balance method. Okay, see 25,000 is the cash price, 10% depreciation. So 1st January 2004 to vendor 25,000. Okay, 1st April 2004. Okay, sorry, let's make it 1st April 2004, 25,000. Now here 31st March. So I'm taking for year by year to make it small question answer. So 31st March 2005 here. By depreciation, first write here, this is for old. Here write 25,000 into 10%, 2,500. Now by balance carry down 22,500. The overall ledger balance is 25,000. Credit side and debit side also 25,000. Now 1st April 2005, second is remaining amount 22,500. Then 31st March 2006, next year. So I've already prepared for my year to show, to make it easy and hurry in showing the accounts. So now here by depreciation 22,500 into 10%, 2,250. Okay, so the remaining amount is 20,250. Okay, tally the ledger 22,500, 22,500. Only 2 years we have to do here, first year and second year. This is the way machine account we have to prepare. An extra ledger I have made for my other question purpose. Okay, sorry. Now show the motor vehicle account in the books of purchaser for 2 years only. So that's why we have prepared for 2 years. If you want, you can make this is a motor car. If you want, you can go with every quarter. Okay, the ledger will be the large if we go for every quarter. Okay, show the motor vehicle account. Here is a written motor vehicle account in the books of purchaser for 2 years ended 31st December 2006. Okay, 1 year contain 4 quarter, interest to be calculated 25,000 into 4% into 1 divided by 4. Okay, now after we have prepared motor car account so far. Okay, so let's do another problem with another video. So here